Can you hear us?
Oh, this is
Yeah,
it.
no, that'd be good.
They're not coming?
Okay.
You got it.
Yeah,
So-
that's it then.
I thought you said they were coming, Carrie.
I
So
thought they
you'll
were.
be muted until we start the meeting.
Unfortunately.
Just so
I
you know.
found out this morning they were not. Didn't have the link.
Can you guys say something? Can you guys unmute yourselves and say something so we can kind of test the sound to make sure we can hear
So
you?
it was like 45 seconds. Okay.
Something.
Yeah, there we go. We can hear you. Thanks. All right, I'll mute you until we start.
I didn't.
Okay, I've put us live, everyone, so just so you know.
So we're gonna have to see.
Oh, okay.
Yeah.
Have you seen her play or
Yep.
same type of thing?
Yep. Yeah, she's very good.
Not the same wheels as,
Not quite, but very close.
yeah, perfect. I always remember your girl had a
James.
breakaway.
Yeah.
Are they able to see
Tyler
council?
actually had to
Yep.
skate the castle.
And then council will be able to see them on the screen?
Yeah. When
Okay,
they
so
get them.
they will be able to see.
It doesn't happen very often.
Right. I don't fact check very often. I was like, I better catch her.
Yeah, the first prize Jesse gave her was legendary.
Nice.
So he said to him after, making it a little obvious.
He talked about it all night though.
Is he very competitive? I know he's athletic and he likes sports, but is he competitive
Oh,
as
yeah,
well?
he gets a little fired up.
Mark. I guess that's a yes.
I can't imagine where it comes from.
Mm-mm.
Right?
He likes the basketball.
Like with everything though, not just sports.
Yeah, he's pretty competitive. Doesn't like to lose. Exactly.
Mark was very competitive young too, but even like playing Go Fish, if she lost, she
Oh,
would
yeah.
cry.
Okay, I'm going to call the meeting to order. I want to acknowledge the Smokeman Valley in which we learn, work, and organize as the ancestral, traditional, and unceded territory of the Smokeman people, home of the Upper Smokeman Indian Band. We will be going into an in-camera in the audited section as well, so just for your note, with that motion to adopt the agenda.
So, Mr. Mayor?
Thank you, Councilor Willis, seconded Councilor McLean. All in favor? Carried, thank you. We will go right into the delegations. We have KPMG here to talk about the audited financial statements. James, can you
Yep.
get them on the screen?
Second. There we go.
There we go. Okay, it's all yours.
Okay, I don't know, Dave, did you want to do any opening remarks or do you just want us to kick right into it?
No, I think this is your guys' show, so I'll just do a couple of brief introductions to council maybe. And Murray Smith was appointed municipal auditor by council, and Melanie Schrum is the senior accountant that was working on the file, and they're both here for council.
All right, and I'm gonna share my screen, so
Yep.
I don't.
That should go automatically. Yeah.
Perfect. So we have what we call our audit findings report on there. Can you see that okay?
Sure
Yeah.
can.
Okay, now we have the technology and introduction started out. Just say good morning to Barron Council. Yeah, so we're here ready to, we're presenting your statements to you after we've gone through the audit process for approval. Yeah, we're a little behind schedule this year. We've had some communications on this and status. I think we just had some challenges with some of the accounting cleanup spilling over from last year, and primarily related to the flood event. I would say that, you know, that whole situation and the subsequent accounting for that with grants, insurance, additional expenditures, it's kind of, I think, made not only your staff work harder for a few years here, it's requires more effort on our side to run through all those transactions as well. So I think that's sort of the overview of the situation. I did have another client last year, municipal client, that didn't actually report until December. So typically the province is quite understanding of these situations, and, you know, they have a May 15 deadline, and, you know, as long as you communicate, they can, you know, they're generally tolerant to that. So I think that's where we were at this year with the delays. So so here we are. Yeah, so I'll get into the findings report. I think my challenge for these presentations is to give you enough detail without going overboard, and then not trying to gloss over things. So I'll make my best attempt at that. And if you want more, just ask for it. But I'll try and stay relatively high level on things. So, you know, it is auditing and accounting, and that's not everybody's favorite subject. But I do want to make sure that, you know, you fulfill your responsibilities and duties to be comfortable with things and be able to approve the statements. So here we go. So there's myself and Melanie. We also had Abigail helping on the file this year. So I'd like to thank Melanie and Abigail for their efforts in getting this over the finish line. This page is a little busy. I won't talk to it too much. We kind of go into the contents here, but at the end of the day, you know, we do look at some certain areas in terms of revenue, and, you know, the capital asset expenditures, really around the revenue for these, you know, grants and insurance and things like that. But there's nothing too unusual. We had a new revenue policy this year that came in for municipalities, the public sector, but it really didn't impact things. It was just the ongoing revenue related to those grants and insurance that standards didn't really impact, but that was a complication. We do have some differences to the annual surplus, and we'll get into those details. So what we're saying is that you have an annual surplus for the year of $7.8 million, and there's a $231,000 difference. And really that difference is because of our sampling. We run into errors, and we're required to extrapolate differences. So oftentimes that number is a lot bigger. Well, it is a lot bigger than the difference we actually identified because of a sampling and extrapolation process. So yeah, I'll get into what those were as we can move through the report. We do have this concept of materiality. We apply that every year. That helps us set our sample sizes. So similar to last year, it was just over 2% of revenue. So this is a pretty typical benchmark and percentage for municipalities that KPMG does across the province. So, you know, and you don't really, you know, these are, again, there's like testing differences. It allows just for timing differences and small errors, and, you know, basically the annual surplus for year wouldn't expect it to be perfect. Sort of a cost benefit of getting it exactly right. So, you know, as long as those differences are just little, you know, small differences, we generally don't have any concerns. But really, that number is about it's a number that allows us math-wise to set our sampling and statistically be happy with our work. So again, nothing too different on the materiality side. The status as of last week, we were just finishing some cleanup. I think I have a typo in there. We'd finished the community forest audit. That's sort of sitting waiting for approval. So really we're just down to getting your approval on the statements and confirming subsequent events and getting management sign off on things. We do have a significant risk around management override. This is not because we have any particular concern. This is because we have to assess it this way and we have to look at it. So, you know, it's a required procedure for all auditors and all audits. So what we do is we look at estimates and journal entries, and if there's any unusual transactions, we just make sure they're okay. So we had no concerns on that. Again, this is just a requirement to do the work and to comment on it. The other, large expenditures, particularly with the flood, is your tangible capital assets. I think you've spent close to $19 million over the last 2 years on that, again, with the flood and, the cleanup for all of that, a lot higher than normal. So, we do certain procedures on all this, and there was just, we noted a calculation difference in amortization. So that got cleaned up in that one. So no other issues on the tangible capital assets. Last year we brought in this asset retirement obligation. So this is where you have old buildings and there's asbestos and things like that, and you have to accrue the liability. So that got brought in last year and we talked about it. And then as time goes on, you revise your estimate, you get closer to the timing of when you're doing the work. So with discounting time value of money, there's like changes from year to year. So really what's happening in the ARO from last year to this year is not much has changed. It's just, again, you're marching closer towards the estimated date of cleanup. So, but last year it was kind of a big project to get that set up. This year was a bit of maintenance, I would say. So that's the asset retirement obligation. So here's where we get into revenue. Lots of words on the page here. So as I mentioned quickly, there is a new revenue standard. So that didn't really impact. From our other clients had some, small changes with dog licenses, but really it was like minor changes in the standards that caused it. But so ignoring the change in the standard, we continue to look at taxation revenue and grants and insurance and things like that. So what we found this year was just getting into more of the flood issues with insurance and the grants and digging into those. We found there was a bit of cleanup required on like when that insurance was flowing through and what was approved and what was not or yet to be approved. I think there's always a wrestling match with insurance companies on your claim amount. In this situation, a lot bigger dollars and probably a lot bigger fight on that. So I know James has sort of submitted a claim, and so he set up a receivable, but that under the accounting standards, you can't set up that receivable until it's been approved. And so some amounts have come in and been approved and some are pending. So there was a bit of cleanup on that. And then there was also the Emergency Program Act, that there's some additional funds available. And again, that's with the province and waiting for approval. And James has had meetings on that recently. So that's sort of moving through the system slowly. So ultimately, those amounts for the Emergency Program Act, I think it's about $3.7 million, and then there's $3.4 million claim for insurance. Those are sitting as potential revenue, but not booked yet. And as a result, so we cleaned up sort of the receivables and your deferred revenue, because of course when you get this money and you have a receivable, you have the cash, but you park it as deferred revenue until you spend it. So I would say there was a bit of cleanup on that throughout the process. Last year, probably your receivables and deferred revenue were high, but I would say your annual surplus, your accumulated surplus, and your cash flows were all good. So again, with that materiality concept, like there was no change in income, but it was just maybe on your balance sheet of truing up that receivable and deferred revenue. So that was, I think, the project this year to tidy those up. And again, with all those different programs and grants and everything, and I can't remember how many grants James said there was. I know there's a lot of different claims and programs there. So just getting through all of that and tidying it up was the exercise this year. So that's revenue. Again, in terms of the statements themselves, there's no big, again, revenue standard change, no impacts there. On the financial statements themselves, they're pretty much the same format as last year. We did add a piece to there's a note on the flood situation and all the deferred revenue and the grants and receivables and et cetera. We did add a piece this year on those amounts that are pending, and in accounting speak we call those contingent assets. So you can disclose them, but you can't book them on your statements until they get approved. So we've added that piece in there, and I mentioned, there's like $7.1 million there pending of hopefully more funding to come in. So that's really the change in the statements. The invested in capital assets and the surplus, we had some cleanup on that for how that was being applied in the notes. Again, it was really just the application of debt, so no change in the accumulated surplus, but it was just the categories in there and how that debt was applied. And I'll go through that note when we get into the statements and show you that. So uncorrected misstatements, this is where I said we have $231,000 of differences. On the balance sheet, it's a $56,000 difference. So you can see a very minor percentage of your total assets, slightly higher percentage of your annual surplus. But as I mentioned, there's sort of a extrapolation on our testing that's causing that to be slightly higher than the errors we found. So what are those 231,000 items? So we have 3 items that are not corrected. And again, because they're sampling and testing and extrapolated differences, you can't, I don't think it's really appropriate to book these differences, so that's okay. So the first one is on payroll. So I believe there's a transaction that should have been reversed and wasn't, so we found that one. And again, when you extrapolate through our samples and the total population, it comes up with this $175,000 difference. And then similar to accounts receivable, same small difference in there that gets extrapolated to 56,000. So the top one and the bottom one add up to that $231,000 difference to your annual surplus or your income for the year. And then that middle one relates to this insurance and flood relief. And this is all really classification of revenues and your deferred revenue. So not a huge difference. There is a prior year difference of $258,000 related to insurance that when you get future claims processed, and I think they came back with 1.8 million of your $3.4 million claim. So there's money coming for that. So that's going to get tidied up in the accounting as we move forward. So, but again, it was just sort of timing of insurance and what you're using for your provincial grant and how that flowed through the system. Because, ultimately you got over $11 million from the province to spend, and you're effectively drawing that down while you're waiting for these other claims to get processed. So, and again, I'll walk through that in the statements and how that shows up in deferred revenue. So, control deficiencies, so there's just some language on what they really are. So we consider these in terms of financial reporting. We didn't have any, significant control deficiencies, but we do have some comments, I guess, on some of the accounting issues. And like I mentioned, with this flood, there's a lot more happening on the accounting side. But going through these quickly, the first item there is that, when we go through the year-end process and we show up in middle of March to do our work, we really like the trial balance to be locked down. So there was cleanup required for last year's sort of the 2023 closing numbers and then what was happening this year. So that was a bit of, there's a lot of cleanup happening throughout that for like a month or two while we were trying to get out there to audit. So we had a bunch of back and forth with James and his team to work through that and get that all tidied up. But that is really what caused the delays for the audit this year, to get that nailed down, get the numbers nailed down, really prior period amounts, so we could get going on the audit work, as it's hard to pick your samples when the numbers are moving. So that was the comments on that one. I've kind of talked about the next piece in terms of the insurance and the the financial assistance program. So again, it's like, what can you accrue as a receivable, and what do you have to wait till you get approval, and how does that impact your receivables and deferred revenue? So again, I think I've kind of talked about this, but I think it's just getting some clarity with James and his team for what we're looking at and what the accounting rules on, like, when can you recognize those pieces. And again, they're bringing it in as deferred revenue. Maybe the timing is off there, but what they're doing is they pull it out of deferred revenue as they spend it, and that's okay. But it was just sort of, what bucket are you using and what are you setting up as receivable that we needed to clean up on. The sample support, again, this is a little bit tricky because, with the flood claim, and there's like a lot of batch entries, and it's tricky, but, when we're coming into audit, we're sort of going back to source documents. So, and again, when you're accumulating a bunch of costs and doing journal entries, I think there was just a bit of difficulty there to get back to the original source documents for invoices. So that took a bit of effort this year. And again, I think most of that was complicated by the flood issue. So that's that. The next one is that we noticed an entry, it was like a bank reconciliation item for some, James has a plan to draw down on some borrowing, and so, but that transaction hadn't occurred yet, so we had to back that one out. So there was a bit of back and forth for that one. So it's just a matter of making sure that your accruals are for, transactions that have been approved, or, you've actually just waiting, you've initiated and authorized the transaction, but it just maybe hasn't cleared the bank yet. So again, it was just, I think, just getting clarity on accruals and drawdowns of loans that we worked through this year to tidy up the balance. And, so that was another one. So again, I think that kind of goes through the main items of sort of the delays for the year and what we found in terms of cleanup and what was left as uncorrected items. Again, just to repeat on those uncorrected items, they're below our materiality number. They're extrapolated differences. So we're comfortable that the statements are good to go and we issue a clean audit opinion. So that's where we're at in the audit process. And again, it's up to you to digest all of this and be happy with our process and give your approval. So I can take questions on our findings report or the process, and then we can flip over to the financial statements perhaps.
Somebody have questions?
If everyone's still awake.
Yeah, Councilor McLean.
Barely. Would you say that either to James or the auditors, the year end 23 or year 24 held most of the flood complications that we had to deal with?
I would say actually the years 21 and 22 had the complications. The complications are starting to arise in that every year we have to review the flood expenses because they haven't been paid by the province, pretty much like they were brand new in 21 and 22. And we have boxes and boxes and boxes of the things, so to find them at a moment's notice is sometimes difficult, and it becomes a little bit more of an onerous process the longer we go. So I think from an accounting standpoint, from a finance standpoint, it would be much easier and cleaner in future years if we had these flood grants and expenses dealt with and start moving forward from stuff that happened 4 or 5 years ago.
So what I'm looking for is, it sounds as if there was carryover from complications and having to go back through previous information and all that sort of thing.
Absolutely.
The other one was from the auditor's point of view, as you were going along, and it's all Greek to me, but it sounded like there were a few requirements added to normal procedure for auditing that you mentioned here and there, that made it perhaps a little more complicated than it has in years past.
I would say, just again, there's more transactions right now on these, this post-flood period as you deal with the expenditures and the grants and everything. So that is the extra work. We didn't really, again, there's more transactions and significant transactions. I would say, though, that going through all these accounting for these issues, we found some items that required digging into and clean up to get the balance sheet more in line with the accounting standards for public sector. So again, this is where I said that, I think your accumulated surplus and your annual surplus and your cash flows were good last year, but I think the balance sheet was a bit off, and a little bit last year we did some cleanup, but also this year in terms of some receivables and deferred revenue being booked too early. So we had to take that off the balance sheet and make sure that those accounts, again, for cash, receivables, and deferred revenue were more in line with the standards, and they offset each other. And then also really what you're drawing down on your government grant, this $11 million grant that you're using, and what's left over. So that was the, exercise this year, is to get all those moving parts a lot tighter.
Yeah, I guess what I was getting at was, as you were going along through your process, a couple times you said, well, we have this process was been added to, now we have to do this, and then a little later on another one, sort of thing. So that's what I was looking for. If there were a couple of additions, requirements that perhaps slowed things down a little bit just because they were new, sort of thing.
Yeah, I'd say the new items, again, last year was this asset retirement obligation standard that wasn't there a few years ago, but now it's here, and we have to do work like the setup last year and then the ongoing work this year. And all these, extra applications for grant funding or insurance are abnormal, and we have to do work on those because they're large dollars, but everything else was all sort of normal course. But again, it was getting the information from these sort of complicated flood claims and getting the sample support, and going back to what I said previously, it was just getting the numbers locked down for the trial balance for the year, and working with James to make sure that those closing numbers from 2023 were kind of locked down, and then the 2024 numbers were also locked down, so we could begin our audit process. So that piece of it was a big part of the delay as well. So, and then once we got that sorted out, we did the cleanup, say, on the flood piece.
Thank you.
Any other questions at this time? Okay. We'll get you to continue on then. Thanks.
Okay, I'll flip over to the statements. I don't know if I said this last year, but municipal statements are a little more mucky than some other statements you might look at. Some of the disclosure requirements, I would say they're not as bad as school districts, but again, they're a little more, some more schedules and things, and some of the accounting is, the language on public sector is slightly different than you would have for like a for-profit entity. There's our report that's all ready to go, clean opinion. So I'll get into the statement of financial position or balance sheet, and I will say this is what you have, and this is what you owe, and this is what's left over. So in terms of what you have, in terms of assets, you have financial assets and non-financial assets. The presentation is a little different, and we'll get into the statement of cash flows, but ultimately, looking back to last year, you had a bunch of cash because you had some grant money and other surpluses as well. And then this deferred revenue, and you also had some receivables and deferred revenue. So you spent, $9 million on capital assets this year. So you're, got money in prior years, and now you're spending it. So that's sort of expected to have that drawdown in cash. Same with the receivables. Some was received, and some was this cleanup of receivables and deferred revenue. But so that's sort of everything else is pretty straightforward, but, on the non-financial assets, the big change again is that tangible capital asset line down below where, of your surplus, $41 million now is invested in capital assets. And again, that's the accounting number for all of that. So those are the big changes on the asset side. And then on the liabilities, again, as you're clearing up some payables, there's some timing and, when are you spending for these flood expenses and when are those bills due? So it's a bit lower than last year. But that's where you can see the next line, the deferred revenue really dropped from 10.7 down to 2.6. So again, you drew down a bunch of this flood grant of $11 million, plus we tidied up some insurance piece that was in there as well. So the debt, small change, you pay down your debt every year. There was a small piece of debt added. I mentioned that asset retirement obligation, so 1.9 moving up to 2 million, so just a small change there, and that's really just an accounting exercise, again, as you get closer to that expenditure. So that's the balance sheet or statement of financial position. Then we get into your income statement or statement of operations, and so you can see, total revenues are similar to prior year. There's some changes year over year. Last year there was the BC Hydro catch-up amount that flowed through. This year, I think there was DCC, sort of an increase there. But your base taxation is similar. And again, your provincial grants flow through depending on your expenditure. So you can see that change from 8.4 to 9.2 almost. So again, there's a bunch of timing issues on when those funds come in and some unusual items that have flowed through like BC Hydro or changes in DCCs from year to year, but in total, revenue is quite similar to the prior year. And then similar for expenses. Again, your expenses are up $600,000, but the categories are quite similar. And then you have your surplus, and then below that line, like we have this insurance claim. So that insurance claim is had one of our differences. So you brought some insurance in last year. Well, technically, some of that should have been in 2024 and less in 2023, but it just changes what you would draw down on your provincial grant. So in total, revenues are fine. Your surplus is fine. It's just what bucket you're drawing from. But ignoring all that, you look at the annual surplus, and I think for a municipality, it's quite unusual to have like a $10 million surplus last year and $7.8 million this year, but that's only due to the accounting rules of these grants, because you're getting them for your tangible capital assets, and then you're spending it there. So again, so I think once the noise settles down from that, I would expect your annual surplus to be a lot more modest, as well as your capital asset expenditures dropping down to a more normal level. So again, the last couple of years of doing those expenditures has really driven that annual surplus to be quite high. So that's the statement of operations or income statement. Again, this is a breakdown of your annual surplus. So you bring in, again, this year, $7.8 million net income, but then you went and spent 9.5 on capital assets. And then there's a sort of accounting exercise to back out amortization, sort of that net change in capital assets is $8 million. And then you sort of use up inventory, these non-cash items on your balance sheet, so there's some small change there. So at the end of the day, your net financial assets only changed by $216,000. Again, that's like cash, receivables, payables, debt, etc. So not a big net change there. So that's just reconciliation. And then more interesting, getting into the cash flow. So you take all that accounting noise and rules out, and it's like, what happened for cash? So you start off with a $7.8 million surplus. Then you back out these non-cash transactions like amortization and accounting losses on the sale of those assets. How your asset retirement obligation, we call it accretion. Again, that's the sort of time value of money, and as you get closer to that expenditure, then you have some non-cash equity income picked up there. So that's sort of the net bottom line from your net income to the cash flow from that is 7.8 million. It's actually closer to over $9 million. And then we factor in how your working capital changes. So again, your receivables and your deferred revenue, there's changes and balances there. But at the end of the day, related to your operations, you're up $4.9 million of cash. And then that's where, again, you went and spent $9.5 million on capital assets, like you were planning on doing. So then some small change in financing, like I mentioned. So almost $350,000 in new debt, paying down of $214,000 on the total debt. So net change of $132,000. So pretty minor activity there. So that's where you see that overall $4.4 million drop in cash, because again, you bring in really 4.9 from all the activity from operations, and then go and spend 9.5 on capital assets. Again, so you had this sort of cash has been received, and now you're spending it for that capital assets. So again, that's the end of the statements themselves. So before I get into the notes, I'll just pause and see if anybody needs me to re-explain or address another question about these items.
Questions? Nope, everybody's ready to go.
Perfect. Bit of an information overload here. So the statements, again, we just have some accounting notes, no changes there. I guess we talk about within the statements there are investment, the numbered company, and the Community Forest Corporation. So that's a separate piece. We do the statements on those as well. Like I mentioned, the Community Forest is done and waiting for approval. That's where more of the activities are. So those get included. Everything else is the same. Again, if you want to read them, just the policy notes and how your assets get amortized over what period. I think that's about it. The cemetery trust funds, asset retirement obligations, again, all pretty consistent with last year. And this is where we talked about this new standard for revenue, and it didn't have any impact. So then we get into, the breakdown of the more significant items on the balance sheet or income statement. So what's in cash equivalents. So what's in money market funds, really, and what's in the debt reserve fund with the Municipal Finance Authority, the breakdown of your receivables, what's still pending on grants, and what's there in taxes. So as you can see, a lot more grants still on the receivable side of things, exclusive of the items we talked about that haven't been booked yet. Long-term investments. So again, this is the subsidiary and the community forest. So what's going on there? So you can see that 673244 BC doesn't have a whole lot in it. Same as last year, no activity. And then you get the community forest where they had a bit more logging activity this year. So 257,000 bottom line on the community forest versus 6,000 last year, and then the town has that 1/3 interest, so that's that equity income that gets booked. Again, pretty normal for a community forest to be quite cyclical and year to year in terms of what's flowing through there. Just depends on what areas they want to log and if they want to get at that or deal with annual allowable cuts, etc. So that's the investments. Accounts payable, again, just some standard disclosure on sort of payables for wages and the remittances thereon. And then we get into this deferred revenue. See, this is where I mentioned, this cleanup or drawdown of those flood grants. So again, the flood grant is the big ticket item in here, 8.9 million last year and drawn down to 400,000 this year. So that's where I said you got about $7.1 million you're hoping to get from insurance and additional provincial assistance to deal with future expenditures. So I think that's the battle to get those across the finish line and get those funds in. But again, it's a drawdown of the old grant really that caused the change in this one for the year. Term debt, again, pretty similar to last year. There's that a couple small pieces included where there's no prior year balance. So Everything else is just being paid down as planned, but just some small pieces coming in this year with new terms. So those go out to 2029, and I guess both of them are 2029. But again, so this is just standard stuff with debt. Probably all familiar with Municipal Finance Authority financing. So you'll see here just their schedule when the principal is being repaid. So again, pretty steady over the next 5 years in terms of repayments, and then the 5.9 million of it's longer term. The asset retirement obligation, again, you have 23 buildings that have some obligations. So this was all set up last year, and expecting it to be paid again, over the next almost 90 years-ish. So quite a long time span throughout all those 23 buildings. So there's some accounting exercise there for estimates and what rates you're using for discounting and inflation. So no changes in those for the year. Tangible capital assets, again, just the schedule and breakdown of everything. There were some items last year that just got reclassed into different categories. So this note explains that. A little bit of disposals on the water infrastructure. So nothing major on the disposal side. Again, this is where you see the breakdown of your $9.5 million of expenditures, engineered structures, water infrastructure, etc. I'm sure you're familiar with what you're spending the money on. Again, prior year schedule and breakdown. Again, there's $1.1 million right now. Last year, $6 million, stuff that's just under construction where we haven't started to amortize things. So there's that. There was no contributed assets during the year. So just to get some other standard disclosures. So the surplus. So again, at the end of the day, you have $50.5 million of accumulated surplus. So this is sort of what your equity is. And you go back to the top of the schedule. So almost $32 million is your equity, the town's equity in the tangible capital assets. And this is where the next one is your sort of operating surplus. So again, pretty consistent with prior year, $2 million last year, $1.2 million this year. And this is where I referred to earlier, is that the debt is really on that tangible capital asset. So we've applied that to the tangible capital asset number this year. And in the last year, the unrestricted surplus, it was being charged to that, which wasn't really the right allocation. So I think it was showing as a deficiency. So really you have over $1 million of operating surplus. And then you have $17.6 million of reserves set aside for these various projects. Again, they're sorted in numerical order, so you can see them from the biggest to the smallest, and the biggest one being the water and sewer projects. So so again, these should all be consistent with what you know and what you've set aside. But really at the end of the day, you have your $1.2 million that hasn't been allocated, and then you have $17.6 million that has been allocated to certain projects. And then of that $50.5 million, you have $32 million of it is in the infrastructure and the trucks and all that kind of stuff. So that's the breakdown of your surplus. Taxation. So again, this just shows the taxation, including stuff you collect for other governments. It flows in and out. So school tax, police tax, etc., etc. You can read the schedule, but we break down that flow of, again, you collect money on behalf of other people and then it flows out. Standard disclosures on contingency, no particular issue there. Pension liability, again, standard disclosures around participation in the provincial pension plan fund and what it has for a surplus, and just standard disclosure. And then really ultimately what impacts the town of Princeton is you funded $232,000 into that plan this year versus $213,000 last year. They're working on the valuation effective as the date of last December, but hasn't been released yet. So that's that one. Again, we're required to disclose the budget, so no surprises there. And this is where you get into some extra disclosures for municipalities and these segments. So they have these different categories and how it's broken down: transportation, recreational, et cetera, So these schedules are required to be in the statements. Again, that breakdown by segment of these total revenues and where they are, and the same for expenses. So it just takes that total from the statement of operations and breaks it down to the segments. So again, nothing too unusual there. And then the prior year balance. We have this flood note. We've added the sort of contingent asset piece of it, because on that last piece there, this is where I say we've added a disclosure about $3.4 million for insurance and $3.7 million for the Emergency Program Act. That, as it states here, it's not yet been approved and has not been accrued, but there are definitely some significant financial items that will impact things. Again, future tangible capital asset expenditures most likely. So those are in progress. And like I said, like what you incurred for expenses, $5.5 million for the flood this year. So the grant revenue related to that, and the deferred revenue ending balance. So again, so just all the different pieces of where it hits the statements, and it's summarized in this note. Related party transactions, nothing of significance there. Some admin provided to the Forest Corporation, and then that receivable related to that. Comparative figures, so I talked about that surplus and the revenues and the other things we cleaned up. So we just tidied up some of the prior balances, but again, no change to cash, no change to surplus, annual surplus or accumulated surplus. So we just sort of tidied up some numbers in the disclosures. And then you're required to have this note for the Growing Communities Fund. And so you got your money, it earns interest, you have some expenditures, ending balance last year, that carries forward to 2024. Again, earn some interest, spend some money, ending balance. So again, this is where the province just wants to see how you're drawing down on that Growing Communities Fund that they provided. So that is the statements. Again, I realize it's a lot of information to digest, but again, they're quite consistent with the prior year. We're happy with them. There was some cleanup, tidying up of things, but again, your annual surplus and your accumulated surplus and everything is no changes to those. It's just sort of the presentation of the different components and when you are recognizing insurance and other grant funding versus drawing down of a funding already received was the sort of the big story for the year. So yeah, hopefully again everyone's still awake. Brains are trying to absorb it all. But I'd say again, we're in a position to issue our opinion subject to your approval. We have these small uncorrected items that I said I wouldn't expect any client to book an extrapolated difference. I think if we get a number that's over materiality, we either do more testing or they book an amount and then kind of true it up in the following year. But again, we're not in a situation where we're over our materiality number. So these things are just going to get tidied up through 2025.
Any questions? Yep.
I guess what I'm looking for is why we are late.
We're going to do that in
And I'm, as I mentioned before, the requirements of looking back for information from a year or two ago, as well as what you mentioned in terms of little additions that the government was asking for. And then I guess added into that, I would say that, is there not, we've been told that there were problems with, we're waiting for payments from the government for our loans, right?
That's what we're told.
Is there any way to
Yeah.
show him back?
Yeah, can we put the
Just stop sharing your screen there, Murray, so we can see your faces.
What I'm getting at is that I'm looking for excuses, and I seem to find them there in terms of what, why we're a little behind this year.
Okay, before you answer that, I'm going to ask for a motion to go into close for 90.1L, discussion with municipal officers, employees respecting municipal objectives, measures, and progress reports for the purpose of preparing the annual report under Section 98, annual municipal report.
So moved, Mr. Mayor.
Thank you, Councillor Gould. Councillor Willis, seconded. All in favor? Carried. With that, I'm gonna ask everybody except for Carrie to leave the room so we can have a discussion.
I got a second, I just gotta set up the video, so.
Yeah, because we have to. Different seat for Gary.
Okay.
Can you hear us okay?
Can you hear us?
Nope.
Should be. That's on. Hello, Justin.
Can you hear us?
Can you hear
We
me?
can hear.
Okay.
You ready?
Okay, one moment.
Can you call it to order before you go into the meeting?
Once I know we're offline. Perfect. Thank you.
Yeah, have a good rest of the summer.
You too.
You too.
Okay, take care. Bye.
Thank you.
I will go and get the rest of the stuff. Sorry.
Just need Chris and Jared, really. Are you gonna be able to make it go back online?
Would you recommend recess?
No, he's
Yeah,
got-
hey, just give us a second.
he's
here.
putting it back online. I think. Somebody in there?
Yeah. Yeah, no, we're back live again on that. And I will remove this. That way we don't have any feedback issues. All right, just waiting for. Yeah, I'm good on my end.
Good. Let's wait for Carrie to come back and then we'll continue on.
Well, and I guess he can't come.
She'd stick him on the end.
Mhm.
As soon as you get into that, I'll turn on the. You're gonna present from there, you're gonna present from there? You're gonna present from there, or you're gonna present from there? Let's go up there. Okay. I just have to figure out where-
Okay, we're gonna go into staff reports now, 6.1, and it's just the town of Princeton financial statements. We just heard them. The auditor has said he's okay with them now. And James, do you have anything to add, or?
Yeah, so I will thank Murray Smith for serving as auditor. It was a more challenging audit than we've usually had, largely due to the historic impacts that we've had from flooding. It behooves me to reinforce that, when we started, we were a $6 million operation. We are nearly a $20 million operation now. We're just doing 3 times as much stuff. So, do 3 times as much stuff. There's 3 times as many things that need to be audited, and we act accordingly. My thanks to my finance staff, JD and Amy. Amy, I know, did yeoman's work on the audit this year. The paperwork burden was very high, and she fulfilled it with a smile on her face and a song in her heart, and she was instrumental in making it happen. So. We through our tangible capital assets, the well 1 and 2 became on our books this past year, and the public works yard came on our books. So the $9 million, if you want to sort of trace where that's going, it's largely 2 major projects with a couple of other things on the side. This year we suspect that there'll be more. Fire hall number 2 will probably come online this year, and Jared is shortly planning on presenting certain capital projects for the $7 million project. So still lots of capital projects to look forward to. I thank council for their understanding in that we're a little late to the game with the audit, but I present the financial statements for council approval. Thank you.
Questions? Motion?
So moved, Mr. Mayor.
Moved by Councillor Elliott, seconded by Councillor Gould. All in favor? Carried. Thank you. It takes us to 6.2, and I'm going to recuse myself and hand over to Johnson McLean. Also let you adjourn it, because I'm going to go to another meeting.
So we're bringing this back in terms of revisiting,
I can speak to a council or deputy mayor.
I'm sorry?
I said I can speak to it coming back to council if you wish.
Thank you.
Okay. There was a request through a councillor, through the mayor, to have this come back to council for discussion and reconsideration. We're allowed to do that as per the community charter. So council can discuss this. Chris is here if you have any questions, further questions to ask. The motion can stand the way it is, or council has the option to amend it, repeal it, and if you repeal it, you can change the motion altogether.
Councillor Gould?
It wasn't me who asked, but, well, I'll speak on it again, because maybe I didn't speak as loudly as I should have last time, in that, with Chris's presentation and his numbers, and you confirmed that if we did take, so we have the GPH and we have Josh Coyne contracting. GPH is two separate systems that give you different controls within the building so that you can keep your climate control at which you want different levels. Josh Coyne's does not have that separate system. The opinion from Chris was that that it was not needed from that contractor's opinion, but the other two say that yes, there should have been a second furnace added. When I talked during the meeting, Chris mentioned, I said, so if we add in the furnace, which was like, let's say $15,000, and then add in the crane rental and the other stuff, another say $5,000, and you add that to Josh Coyne's, the price is less but comparable to GPH. So if we go on our purchasing policy, when we review RFPs, that's supposed to weigh heavier towards a local contract versus an out-of-town contract. If the requirement and need really is for a second one, if the opinion of the contractor is that it isn't, but if the opinion of the person presenting is that it should be, well, if we were to go back and ask the contractor to put that in, apples to apples, comparing it then with a whole separate system, it should be in favor of the local, based on our tendering policies and RFP policies. And this, in fairness to Chris, was his first presentation. He was not familiar with maybe putting it all together and how you show your weighting of it and your rationale. So my stance was still that it should go in favor of the local contractor.
Move forward.
Okay. One of the things that could happen if council wishes is the motion can change to refer it back to staff to do a request for proposal or request for quote with the specifics, standards and equipment that is required to make it the HVAC system work for the annex. That RFP would be then presented to the people that he received quotes from. He can get them back and do a comparison and then bring it back to council. That is just a recommendation.
Yes, and it seemed like it came up last time too, but also in the power seemed like it came up in the middle of it. Like, were we gonna take some away from it, or did we need to take some away?
So I believe Jared, I got some information over to Jared, so Jared, I believe, can answer to that.
Yes, so I talked to our local electrician, and I've requested a written report, but as of right now, verbally, there is enough power for the plaza as is and the annex building.
As, like,
With that system that Chris proposed.
okay.
So leaving the band shell with the 125 amp breaker,
That's right.
and then still accommodating the possibility of having 2 heating zones in our building.
An upgrade's not required then. That's good to know.
So either one we could pick, it would be sufficient for that?
That's right.
Okay. I'd make a motion that we do an RFP like Carrie suggested.
I second that.
Second by Councillor Elliott.
I also need you to repeal resolution
106.
106.
I guess my input on this is that, in my mind, we are not the experts in terms of this sort of thing. This needs to come to council in a finished form.
Yes.
There shouldn't be any questions about whether we're gonna have power to this place or not. It needs to come to council with the assurance that our staff has gone through everything and this is the best deal. Yes, and we look for local input. If they can compete, then we look for local input, but not where we're supposed to be able to.
Unfortunately, the power thing came up at the last minute, after I had already given you guys, like after I submitted my proposal or my request, the power thing came up after that, so.
Okay. And I guess all I'm saying is in the future, it makes things a lot easier that what we get
100%.
is what you people approve of. And all we have to do is have a look at it in terms of things like, did we give locals a chance at it or those sorts of things. Anyway, was there any more?
I do
You gotta repeal
need
the-
resolution 106 repealed.
I'll make that motion.
Well, we have a motion on the floor.
But we've already voted.
Who did it?
Oh, you,
We didn't call.
okay, sorry.
I didn't call for a vote.
Oh, okay.
Sorry,
Fair enough, sorry.
So we want to pass the first one? Is that,
you should, yes.
all those in favor? Motion carried. Now you're
I would like to repeal resolution 106. Thank you.
moved by Councillor Elliott,
I'll second that.
second by Councillor Willis. All those in favor? Anything else?
Nope, that's it. Nope, I'll meet with Carrie and Lyle hopefully next week, and I'll get the proper procedures and forms and present a full package for my first time.
Perfect.
Thank you.
Thank you for the learning. That'll get good experience because I have another one coming up.
So we go, it's been-
He's
Oh, he's gone, he's not coming back.
Yeah.
So are we done?
I think so.
Yep.
Motion to adjourn.
So moved, Mr. Mayor. Deputy.
Yes, moved by
Mr. Deputy.
Councillor Gould, second by Councillor Willis. All those in favor? Motion carried.